Welcome to Subramani. One question which keeps getting asked is, should I invest in gold, and how much should I invest in gold? So first of all, should you have some gold in your portfolio? The answer seems to be yes. But I'm not considering the physical gold that people have in terms of ornaments, etc. That people will continue to keep. They will not buy. They will not. I mean, they will continue to buy, but they will never ever sell. For a daughter's wedding, they may give away a little bit, or they may buy more. But chances are it is not an investment. Simply not an investment because of the making charges. The impact cost is too high. When you buy some gold jewelry, there is gold worth 100 rupees and making charges worth 20 to 30 rupees. There is absolutely no way you can trade in it, or yes, it is security. But let's face it, how much of gold are you going to give to your daughter? What once used to be called Stri Dhan. If something were to happen to her, that money would be a security. Does it make sense today? Is it even relevant? Suppose you have a daughter who is well qualified, who is earning maybe 50 lakhs a year. Are you going to give her 5 crores worth of gold to have security? Because that's the kind of money that she's going to need for security. I think makes no sense. Once you give your daughter education, then the amount of gold that she has becomes completely irrelevant from a Stri Dhan point of view. So that is out. It's not some security or something like that. I refuse to accept that as security. Second, gold as jewelry for wearing. That is again money for fun, right? It's like the golf kit you bought, or like the nice clothes that you wear. You don't expect to get a resale value out of your golf kit. It has got zero resale value. Nobody buys. I mean, you're too rich to be able to want to even say that you want to buy a second-hand golf kit. So that's out, right? So something like that. Third, you can buy physical gold and keep it at home. The risk is if the gold gets stolen or things like that. So people don't normally keep it at home. They keep it in a bank, in a locker. And then the pain and hassle of going to the bank, and it could be some 20 steps down below the ground, may not be well ventilated. You feel suffocated going to the bank locker. I hate going to the bank locker, so I won't. But that is up to you. And then obviously there is a cost of GST cost and storage cost. All that will be there when you physically buy gold. Physical gold buying makes sense only for those people who are investing their cash or their ill-gotten money. So I am discounting that physical buying. You don't need to buy physically just to store, right? If you want to wear it, then be my guest. But just to buy and store keeping gold in physical form makes no sense. Don't do that. I mean, I know people say buy it in the form of biscuits, buy it in the form of chain, etc. Yes, some of that makes sense. If you're coming from Dubai and you think you'll get a 5% arbitrage, then it makes sense. But otherwise, no, it does not make sense to use your cash or check and buy gold in India and just keep it in the locker. So that physically I'm ruling that out just for storage of value. That brings us to the next possibility is you can buy ETF. ETF are exchange traded funds which is managed by mutual fund houses. So you name the fund house and they will have a gold fund. Whichever fund you want to, you can go and invest. Basically look at the market price as of today, the NAV as of today. That will show you how much are the asset management charges. You will end up paying asset management charges because the fund house is not taking a naked position. When you invest in gold or when you put money in a gold ETF, they have to go and buy gold. They have to pay whatever are the taxes, storage charges, etc. That will obviously come from your asset management charges. They are not here to create some love for you, right? They are here to make money. So obviously all the costs, management fees, etc. they will recover from you. So to that extent, the ETF is less efficient. But do remember, ETF has one advantage of liquidity. Anytime you want, you can sell. Anytime you want, you can buy. So the minute there is an Ukraine war and gold prices go up and you want to sell it, ETF is a great option, right? If you think COVID hit and therefore the gold prices spiked and you want to sell, you can sell. So that way gold in the form of ETF is useful, but there are asset management charges. So over 10 years, 20 years, if you're going to hold it, Do you want to lose away that 1 or 2%, whatever is the charges that you pay for all this? That's a call you have to take. That brings us to perhaps the best way to buy gold and hold for a long period of time, which is the option which I take, is the sovereign gold bonds, which are currently open. You can go to sovereign gold bonds are like RBI bonds, in the sense they are issued by and on behalf of the government of India. It is available to you in a demat form, in the same demat where your equity shares and other things are kept. So there are no other charges. So you can buy SGB from the government through your own bank account, whichever, HDFC Bank, ICICI Bank. I'm sure all of them will give you the option of buying gold SGB. So you can buy sovereign gold bonds and keep it with you. What are the advantages? Well, it has got it's an 8-year product, so you have full liquidity after 8 years. After 5 years, you have partial liquidity because it can be sold in the market. But the advantage is you get 2.5% interest from the government per annum, and that is and the capital gains is totally tax free, right? So that is a huge advantage. After 8 years, whatever return you have got in gold plus 2.5% is what you're going to get. So it's not a very bad option even from a debt point of view. If you're going to keep money in debt, let's say you're going to keep a big amount of money in debt, you might as well keep some money in SGB, because the debt portion you will pay tax on it on a year-on-year basis. Even assuming you keep it in a mutual fund, today the debt portion is going to be taxed along with your other income, right? So you're not going to get indexation, capital gain benefit, any of those things, right? So even after whenever you withdraw, you will pay tax, and if it is a bank fixed deposit, you will pay tax on that every year. Now there is one more option, and whereas SGB is tax free, right? So that is the best way, I think that's the best way to invest. If you, however, want to do a SIP, systematic investment plan, there is one more option which is available, which is putting money in a multi-asset fund. Suppose there is a fund which is a multi-asset fund which has got 65% in equity, let's say 35% in equity, 30% in arbitrage. So totally 65% in equity, 25% in debt instruments, and 10% in gold. The advantage here is you could do a lump sum. Let's say you want to put 1 crore into it. That's also fine, but of course it's a big amount of money going directly into equity. But you can do a systematic investment. In a systematic investment, what is happening is you're getting equity, debt, and gold with equity taxation. So from a tax point of view, a multi-asset fund which is getting treated as a equity fund is not a bad option at all, even for investing in gold. So slow, but SGB is definitely a good option of investing in gold. That is what I do. I've been buying for the last 7-8 years. So some of it might be coming up for maturity now, and if it's tax free, it's just great. Thank you.